We've all heard of Ford, the auto company from the States. They've been dominating the world's auto markets for over 100 years now. But what many people don't realise is they are quite large and quite massive in the world of EV, electrical vehicles, and they're doing a very good job at it. The company as a whole, they've cut costs in relevant areas. They've redesigned their product range to be more specific, more focused, and like I say, doing very well in the EV sector, and now you could call them a very big player in that area as well. So with all of that increased interest and momentum in the stock at the moment, is it the right time to buy? Could this be one of the best value stocks around at the moment for the longer term? Well, I'm going to have a look at the charts and see where they're heading next. I'm going to have a look at a few trade ideas and throw them into the mix as well. So with that, let's get on with the analysis. So let's get stuck into the longer term price action on the weekly line chart, and we can see this decrease in the stock price to whereabouts sort of the COVID bubble hit us, and then it shot on up, and as you can see up there, nearly 500% to those highs in sort of early of this year, and then we've seen a big decline in the price all the way down about 50-60%, but it's all around this price action at the $12-13 area. You can see the support there. We've got these different levels here over time where the price has bounced on back upwards, and that to me is a critical area around about $12 in this sort of area here. Breaks down through there, that's a very bad sign for the stock, and at the moment the price just pulling back to this sort of 15 area. And again, for me, the key break zone for the bulls is this 61.8% Fibonacci line around about 17. Bit of no man's land in between the two areas, so a bit more of a risk for the trade, but above there then we could be seeing those highs of the $25 to $30 area targeted once more. And then if we move on to some shorter term price action using the line break chart, now this is great for reversals and turning points and getting into the trade. And if you are bullish, I've got a couple of entry points here for you: $15.95, $16.05 to the upside. Bit of a wait yet, as you can see, but maybe patience here is key to a good entry. Now onto the daily Heikin-Ashi. What can we take away from there? Well, we can see the trend being down, and our detail on the bottom signals where the ATR has been decreasing of late, but in the shorter term we've got the DMIs looking a bit more positive, looking like it's just about across there. Volatility, well, it's reasonable at 43-45%, but not as high as it has been, so maybe we could do with a bit more volatility in there to help things along the way. And volume as well been declining slowly, but we have been over the very barren August, summer holiday months where things do quieten down. But now moving into September, the last quarter of 22, hopefully we can see some more positive price action. Now in terms of our two line pink box breakout setup, it's neutral at the moment. You can see the price sitting inside the box there, and it's got to get up to like the late 16s before wanting to push on higher. And we can see that low put in the 10 sort of area as the recent sort of support, but overall I'd call it a sort of more warming up type setup on the daily Heikin-Ashi chart here. As the conditions start to improve, we've got earnings a way off yet, but things starting to look more promising after that sort of run off in price from the start of the year. Now getting really into the minor detail, we've got the Renko chart. I use a 20 cents block size and signals at the moment. We've got a longer term bullish trend in there, stochastics just turning bullish. You can just see the regression signal there just starting to warm up to the upside. price has been in this sort of box area for, you know, August, July so far, and in terms of upside, if we can push on up through this shorter zone at, you know, $16.50, say, we've got, you know, $19, $20, then those highs at $25, $26, and then up into the early 30s as our target. Downside break from here if it's under that 14.5 zone, back down to those lows at 10, and a break from there a bit more serious, and it could all be way back to about $5. But it looks like it's stabilized, like I said, from that trend, and hopefully we're going to see this shape on the months to come as things look more positive, both the fundamentals and on the charts. Now, in terms of trade ideas, I'm going to focus on the upside, and well, I'm going to look at the options ideas first. Now, if you are weak bullish, you don't think it's got quite the legs to get up there, then an income trade might be good for you, and I've put together one there, that first trade there, selling October 12-14 puts, and that gives you an income of $28 per one unit. So it's okay, it's nothing great in there, but it gives you some ideas of, you know, what you could make if you're sort of maybe weak bullish. If you're more outright bullish, then I've just gone straight for 15 strike November call, and gets a, you know, cost of $142 for you for the one options contract. And if we mess around with the simulator at the bottom, we can see the potential returns that we can get. Now, going for the November expiry gives you that time to make the money, and it also reduces like theta costs there for you. And you can see if it goes up to, you know, 21 sort of dollar area, which isn't out of the question, then that's a 308% return. And finally, also got a more sort of risk managed trade there, buying 1 November 18 strike 15-18 call vertical spread, slightly cheaper than the outright call, and can also give you a decent return, 183% there again if it gets up to that sort of 20-ish, $21 area. So 3 options ideas for you there. And what if you were using spread bets or CFDs? Well, jumping into my Trade Nation spread betting CFD account, I just did a search for Ford. We've got 2 options here. You've got Ford general rolling contract, or you've got this mini one which gives you about 10 times the exposure for less of the cost. That's nice if you've got a small account. Minimum trade size, as you can see there, 10p, and it gives you 5-to-1 margin. But the plus point here, using spread bets and CFDs, if you are bearish, then you can easily go short without all the hassle and costs involved in normally doing so. In terms of technicals, Ford still have some work to do. So for score, I'm going to go for weak bullish at the moment. Now you can see the Heikin-Ashi a lot more neutral, that's the longer term POV. Renko a bit more bullish, and that just gave me the edge to give it a weak bullish score. Top right, we've got some areas for you to get in if you are bullish, and then into the targets. I've been quite aggressive in terms of the stops, both to the up and downside. That's given some pretty decent risk reward numbers. So the upside 6-to-1 and 10.66-to-1, and downside 1.75 and 3.5-to-1. So overall though, it's given me a weak bullish feel at the moment for Ford. So Ford, much better fundamentals at the moment, moving heavily into that EV sector, which could be their saviour. Increased competition though from the likes of GM, Volkswagen, Tesla, but they are in a stronger looking place, and the technicals starting to warm up after that sell off from the start of the year. So could this be a good value point to get into the stock? Well, let me know in those comments below. And if you've liked today's video, please give us a thumbs up. Don't forget to hit the subscribe bell buttons. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.